Come on, Bitcoin, do something. Please do something. It is stuck once again in a very, very, very sideways movement and range. Hello, Adrian, and welcome back to another episode of the Dang Oracle. It is 7:30 p.m. UTC plus 8, and welcome everybody who is watching around the world. First of all, let me say hello to the hardcore crew. Hi Lex, hi Darren, hi Nikolai, hi Michael, and everybody who is slowly coming in. And yes, yes, Nikolai, it's been really crazy, right? Like, traditional market has been going crazy. Some altcoins have been going crazy, but Bitcoin has been incredibly slow and incredibly boring, to be honest. So yeah, luckily I've been trading. Well, not really trading. I don't call it trading, to be honest. I've just been been holding and longing traditional markets. So that's basically what I've been doing. Like I said, you don't have to be a genius to be making money right now in this market and traditional markets. Um, just had to buy, the tech stocks, basically, Microsoft, Apple, Netflix, Tesla, and you would be okay. And definitely if you had Tesla, that was pretty crazy. Once again, yesterday pushing up over the 1400 right now. It's just crazy. Anyways, hi Gita, hi Marius, hi Tina, hi Fardeen. And yes, Bitcoin dominance has been going low, going down as well. Yes, that is correct. Anyways, before we go into more details or in more technical analysis, let's take a look on the COVID numbers and see if something changes there. Meanwhile, some of the the late hardcore crew is trickling in. Let's take a look. Oh, US is now pretty much at 3 million cases right now. 3 million cases. Brazil as wow, close to 1.7 million cases in Brazil. Wow, that's not a pretty number right there. Hi Moncol, hi Laxman, hi Gerson, hi John. So yeah, crazy. Let's take a look. That's the CME chart. That's not the one that I want. I want the COVID chart. The COVID chart is here. Yes, I saw the TikTok meme as well. It's pretty hilarious for Dogecoin. I think it's really hilarious. I also hope that you saw the shorts that Tesla is selling. That's hilarious as well. Like selling shorts. That's just such a hilarious. Short this motherfuckers. I mean, I think it's very funny what Tesla is doing, but yeah, I think it's less funny for other people. Anyways, we are at 11.8 million cases. As you can see, it has been slowly trickling. Like, the speed has been less quick right now, but the top 6 countries, the biggest causes, yeah, it's just it has been insane. Like the US, Brazil, India, definitely Brazil is just looking good. Russia, Peru, and Chile, all of those things are not good at all. I don't know if I can play the TikTok meme. You should just look it out, look it up on TikTok itself, Nikolai. But it's pretty funny. Anyways, so yeah, maybe let's take a look. Immediately take a look first at the let's make a new chart at Bitcoin dominance. That's what I was looking for. Bitcoin dominance. Okay, Bitcoin dominance. Bitcoin dominance. Where is it? BTC dominance. Right. Yes, BTC dominance. Wow, look at that, ladies and gentlemen, look at that. Woo. Falling like it's crazy. So we are having some sort of more like this right now, like as a trend line. Let's see if we can make something see something from before. Or even that, it even broke this support line here. Crazy. So we have to move one more down, I guess. Yeah, but this dominance chart makes absolutely no sense to me. So it's like impossible to be charting on the dominance chart. So I have no idea where this is. I have no idea where this is going. But anyways, what I do know, what is going on is the following. The only thing that you can say is, okay, whenever we had a bull market, usually what happens is, so Bitcoin runs the bull market, leads the bull market, and then afterwards the altcoins run the market afterwards, basically pushing, lagging before Bitcoin. And what's happening right now, and that's one of the reasons why I can't be super bullish just yet on Bitcoin, because I do believe that everything, that Bitcoin itself is actually being held up by the traditional markets, and not by its own fundamentals, to be honest. But let me paint the scenario. So every time we have seen a bull run, we have seen Bitcoin leading the market, and then altcoins moving along, chugging along with Big Daddy, basically. And this is not happening right now. Like, Bitcoin has literally been ranging, between let's say 9K, put it down on 9K. Meanwhile, we can see altcoins, not all of them, but most of them, altcoins, are doing really well, right? Are doing really well. So yeah, it's been crazy. And as you can see here, yeah, it's been falling. Bitcoin dominance has been falling, so it means that a lot of people are pushing their, it's kind of normal as well, right? When things are so boring, and people don't trade anything else, then because most of the people who are trading crypto also keep trading crypto. I don't know why, because nowadays I mean, the past couple of months, you should not only be trading Bitcoin, you should have been trading regular stocks as well. I mean, that's where the traditional markets that's where the action was. So yeah, kind of makes no sense to be not trading it, right? Anyways, let me take a look at the ICX charts. I just had okay, before I go to ICX, I just wanted to go back into Link, because we went to Link yesterday, and as you can see, we were targeting a $6.7 range or something like that, and we hit $6.4 today. So that's pretty good. The only thing that I want to also show you guys is the RSI right now. This is very high. This is just the daily, so it's very high on the daily. Means, yeah, most likely we'll have a pullback pretty soon. But if you go on the weekly, let's take a look on the weekly, right? On the weekly, look at this, guys. The weekly is now in the bullish control zone as well, and that's very dangerous, right? Okay, just a quick, let me remove the Ichimoku so it doesn't clutter everything. Just to show you guys, whenever we hit these tops over with the RSI on the weekly over, we had a major correction down. Here it didn't even top, but we did get the correction. But here we got the top, as you can see, and then we got a correction. So it's like I said, things on the altcoin market really look pretty much overheated, right? So if you are still in altcoins right now, I would be this is the time to be taking profits, taking profits, and call it a day. Let's put it like that, because it's getting really high right now. So yeah, pretty crazy. Is there bearish divergence on the weekly? Let's take a look. So we have a higher high, obviously, but the thing is, first of all, it's not bearish divergence just yet, because we have not confirmed that this is our high, our local high just yet. So we can't say that this is bearish divergence just yet. Also, the RSI actually did this, right? So let me take a look on the bigger chart to see if yes, it does potential bearish divergence on the link chain chart. But I mean, you don't even have to be looking at the at the divergences. As you can see, I mean, we are here on the on the tops right now. So pretty confident to say that, you know, take some profits. If you are in some alts, I would take some profits. That's all I'm saying. It has been an incredible run for Link. After we broke the $5, basically the $5 was the key point, right? Like if you were charting Chainlink, you could have done something like this. 1 second, let me make a quick chart. So we have some sort of a ascending triangle that we were forming, right? So on this spot here. 1 second. Maybe I'll put it on the 4 hours so you can see it even better. And remove the magnet. Let me close this for a while so you can see better. So yeah, we basically had an ascending triangle that was being formed here, as you can see here. So an ascending triangle that was being formed, and it was like around $5. I remember it was like around $5. That's the only thing that I remember. It was a little bit below $5, $4.9 or something like that. And if it would be breaking up that ascending triangle, and then it would go all the way up, right? Actually, the measured moves that I had was only this. I kind of expected like this area here, like to 5.6, 5.5, but as you can see, it's shattered all expectations and records towards the upside. But yeah, like I said, I would start to be looking a little bit more careful with altcoins, and that's also a very bad thing, right? Like if altcoins are starting to look tired and starting to look toppy, that bodes just a bad thing for overall of the market as well, right? ICX, let's take a look on ICX. I haven't taken a look at ICX USD. Let's take a look here. Icon. Ooh, yeah, pretty similar structure where it's pumping, and let's take a look. But yeah, like I said, I always am aware, and when I zoom out and I see this and as a chart on the weekly, this is still not a good chart, right? But obviously it's doing well right now because, you know, it's breaking up a very long resistance that we had from here, right? From this point here on the weekly, right? Let's put it on the line chart, then we can see it even better. Actually, no, it hasn't broken just yet. So if you would be looking at this, yeah, I think it looks like we might get a rejection once again and get another top. So this could be a top, this could be another top, and this could be forming another top. So maybe we have a little bit up left and then back down. But to be honest, this is not a long-term healthy looking chart, right? Like I mean, it's pretty clear, right? Most likely down more in the future. Until we break some structures, right? So if we do break this red line structure, then it does look towards the next level up. I would say around the EMA 100, right? So the 0 point, I mean, it can do really well if it does break above this, but I don't think it has enough power right now. Let's take a look. Let's take a look if what the RSI is right now. RSI. Oh, actually, yeah. So we have a toppy here, as you can see, RSI on the daily, on the weekly. Sorry, on the weekly. Once again, every time we get to overbought levels on the weekly, not a good sign. But anyways, we still have some space to go before rejection. Let's go down maybe on the daily. Oh, daily is looking very high right now as well. Overbought. yeah, but it can always go a little bit higher, right? Like here, it went all the way here, and then it made a substantial crash here towards the downside, and then it was this is accumulation. This is accumulation. This is accumulation. This is accumulation, and then we have a breakout towards the upside, as we can see here. But yeah, you would have to be very, very patient, right? You would have to be very patient with this altcoin. But long term, it still does not look healthy, right? It's not like Link where I'm seeing you know this is basically following Bitcoin way more than anything else, as you can see. Only it goes into a higher pace right now towards the upside than Bitcoin. But long term, I don't think this is a very healthy chart, except if we start, like I said, if we start breaking the tops of this red line that you can see here. It has always been getting back rejected below this red line, right? So if we can finally break over this red line, it does have some potential and future. But the problem is, like I said, if Bitcoin does pushes things down, then it doesn't look at good at all, right? Let's take a look now that we're on a roll for shitcoins. Let's take a look on VAT, VeChain. Let's take a look on VeChain. VeChain, okay, very similar as ICX, I think, right? Let's take a look on the weekly. Wow, look at that! Holy shit! It's pretty crazy. Yeah, not enough data on Binance. So let me take a look on another. Maybe let's take a look on Bitfinex. Wow, that doesn't look great as well. Let's take a look on maybe on Bittrex. We have more data. No, we don't have more data. That's it, I think. I don't know where it was listed first. Maybe on HitBTC. Yeah, I guess on HitBTC it was listed first. So in terms of a healthy chart, this is actually okay, I guess. You know, it's not like a super dead heartbeat chart, so it doesn't look that bad. But yeah, once again, it just looks crazy toppy right now, right? Crazy toppy. On the daily, it's like jumping out of the chart. We are at 92.54, 92.54 right now. So crazy. Yeah. Once again, if you are in any altcoins, and you have some of these amazing altcoins and you did well, congratulations. And but like I said, this is the time for cashing in. Me myself, I don't have I have so little amount of altcoins, so I have no idea about all these shitcoins, right? The only thing that I have been following a little bit was Chainlink, because I was always so surprised that they were doing really well as well. And I've met the founder of Chainlink, and I've spoken to him about with him as well. So that's the only reason that I know a little bit about Chainlink. But overall, I don't have any Chainlink myself. I'm a loser like that. I don't have any Chainlink myself. I have a very small portfolio of altcoins. It's like less than 3%. I think it's less than 3% of my total portfolio. So yeah, I'm not the kind of person to be talking about I mean, in a positive way about altcoins. Sure, I mean, most likely, I mean, this is a nice pump, could have made a nice amount of money with it, but I don't think it's sustainable. I don't think you can have long-term profits with it. And for me, like I said, this is my job, so I want to be having something that I can sustain for a long time. And yeah, sometimes you get these crazy altcoin runs. Sure, you get it, but more often than not, right? That's basically it. I'm not saying that you can't be profitable trading altcoins. That's not what I'm saying. I'm just saying, like, yeah, I'm it's not my specialty. I'm not really interested in it. I I have too many other things to be doing than staring at the low cap or a very low market cap altcoin. But like I said, if people are interested in looking for me to be looking at an altcoin and give my opinion about it, then sure. So yeah, doesn't look that bad in the long term. VeChain doesn't look that bad at all. But once again, yeah, I mean, if you're starting to see these kind of patterns, you know, it's time to be cashing in. That's what I'm thinking. That's what I'm thinking. Anyways, let's revert back to good old Bitcoin and move on until where we were talking. So yeah, yesterday where was that? I was talking about this range that we are stuck in, and yeah, we're basically still stuck in that range, right? We still haven't. We still haven't broken out of this pattern, but we also haven't broken down towards as well. So both scenarios are still very valid. The only thing that I'm sticking to my guns is that the probabilities for me personally, and in terms of like the indicators that I am looking at, are still pointing towards a break towards the downside, and definitely later tonight or tomorrow. And it has nothing to do with the technical analysis on Bitcoin. It's actually the technical analysis on the traditional markets. Okay, so before we move back into Bitcoin, I wanted to show you guys a little bit on the traditional markets why I think that most likely we will have a little pull down on the traditional market. So this is the S&P chart, the SPY, the S&P chart. And this is the candle that we have formed and as a close yesterday. And you can't say that this candle close is very positive as well, right? It's a pull down candle towards the downside. It's bearish engulfing for the other, from the previous daily candle close. But not only that, when we are looking on the Nikkei chart, that's the reason why I actually had the Nikkei chart open. So let's go on to the Nikkei chart. So what you have to understand is all the markets have been right, not only the S&P, not only the American stocks, also the European index, the UK index, the German, the DAX, the German index, the Japanese index, the Nikkei. Also everything has been pumping really hard, as you can see, right? The only thing is, of course, since we are in Asia, the day trading stops now, and then basically later tonight the American trade starts, right? So by watching the Nikkei chart or the Japanese charts, we can indicate, you know, a little bit what is gonna happen in the traditional markets. And what we're seeing on the Nikkei right now is after that doji candle, which we also can see here. It's not really a doji candle, but very like a very similar pattern here on the S&P. Afterwards, today, basically, we have this candle that is pushing things towards the downside. So this is kind of like, you know, a leading market indicator. It's not always correct, of course, but now it is more correct because the traditional markets have been just on a major bull run in the whole world, not only in America, because the FED is printing basically money or quantitative easing. Let's call it quantitative easing. You know, using the proper words. Quantitative easing. It's not happening, of course, and all the support is not only happening in the US. It's also happening in Asia. It's also happening in Europe, and so on and so on. So now more than ever, the Japanese index we can use as sort of like a leading indicator towards the American, or sort of the expectations, because it already happens, right? Today the trading day is over basically for Japan, and then we're moving over into the New York Stock Exchange. So other than that, looking at the Nikkei, we can see that most likely we will have a small pullback on the S&P. But not only that, we can also see in the futures that we are having a little pullback, as we can see here. Overall, we are seeing like a slow pullback towards the downside as well. But that's kind of normal as well, right? Because we can see the 4-hour Stokes are curling towards the downside, the 6-hour Stokes, the 8-hour Stokes, the 10-hour Stokes, and of course the 12-hour Stokes
everything is curling a little bit towards the downside on the S&P. And also on the Nasdaq, we can start to see sentiment divergence, which is here. You can see the white line on the sentiment, which means that sentiment is slowly going towards the downside. Also on the SMI chart, we can see we have this, I told you, the flashing green on the background until we top. And then usually we get a red dot, which means the sentiment is starting to go towards the downside. So the reason why I think that we won't be able to be breaking through this resistance or this wall is mainly because I think we will have a small pullback. Am I bearish? I'm definitely not bearish on the traditional market, because with that monthly close or anything like that. But like I've explained before, the Bitcoin has been a little bit trading on a very weak as a weak asset in comparison with basically everything else, right? Like I said, altcoins are mooning like crazy, traditional markets and stocks are mooning like crazy, but Bitcoin has not, right? So that doesn't show a lot of strength in the asset, although everything is mooning and pumping right now. So because I do think that the traditional markets will have a small pullback and then today, tomorrow, and the next couple of days, maybe until the end of the week or something like that, I do believe that Bitcoin is going to be following and not have the strength to be breaking out of this pattern as well. Also, well, I'm still looking at the daily RSI. It's still in that channel, so we're still waiting for it. On the 4 hour, we can see that it's still being held. It's actually being squished now between the 200 simple moving average and the EMA 200, or the purple line right now. It's being squished in between there. And if we are looking at the RSI on the 4 hour, we can see that it is some sort of like a rising wedge pattern that is going on right now. And like I said, because of this pattern, I do believe that most likely we will be having a break towards the downside. But as you can see, maybe we can go a little bit higher and then go back down. Most likely when the traditional markets are going to be starting, and if they do make a pullback towards the downside, I do believe that Bitcoin is going to be taking a pullback towards the downside as well. Of course, nothing is guaranteed. Nothing is you know, like I said, the Bitcoin market is going to be doing what they want to be doing, but that's still my opinion. And as long as we do not break above this green box here, or the 9,400, what is it, 9,450-ish area, if we don't break above it and control that zone, I don't think that we will have that major breakout that we are waiting for. Other than that, we can also see at the heat map right now, we can clearly see that the heat map, we are starting to build more and more resistance here in this area as well. And the resistance is from around 9,330 to 9,350, 9,360 basically. So more selling pressure is being put here on this area as well, right? So it's moving, it's getting pushed there as well. That's not true, Laxman. That's definitely not true. So if traditional markets make corrections, the money is not going to Bitcoin. The money is actually just going to US dollars or the Dixie or the euros or in cash. That's what that's where the money is going when we are making some corrections, because people are going to take profits. And where are you going to take the profits in? You're going to take profits into your fiat, and then you're going to be spending your fiat like, you know, hookers and coke. That's basically what they're going to do, these people from Wall Street, right? I hope you've seen the Wall Street movies, then you know. Anyways, yeah, that's not true, right? If the traditional market is going to make some corrections, they're going to sell it into fiat and yeah, and spend it. That's basically what is happening. It's not going to Bitcoin. The traditional market aren't more correlated to the crypto market cap rather than only Bitcoin. Well, yes and no, but you have to understand that Bitcoin is the largest and makes the biggest part of the whole crypto market cap, right? So the correlation, I mean, it's more important to see the correlation between the traditional markets and Bitcoin rather than the whole crypto market, because the effect is kind of the same, right? If, like I said, if Bitcoin goes up, usually the other altcoins are being pulled up towards the top as well, and that's what we are seeing right now as well, right? So yeah. Anyways, yeah. Like I said, I still don't think that we have enough strength to be breaking out of this zone towards this 9450. Of course, I could be wrong. I mean, things. I mean, I've been wrong many times before. So that's still my bias. And a lot of people will be, of course, disagreeing with me. Oh, look, we have a small push right now here. Let's see if we manage to break out of this rising wedge on the RSI. So we might be witnessing something real time in a while right now. But anyways, before we go more in depth into the Bitcoin analysis, I wanted to show you guys this book, because as you know, I have been reading quite a substantial amount of books since I started learning how to trade. And one of the books that I've always felt is super important or super interesting, and of course it's free. That's the main reason also that I wanted to show it to you guys. And you can find the book here on LRAtrading.com. So maybe you can write that down somewhere. So LRAtrading.com, and you can download the ebook here. It's only 0.7 megabytes, so it's very small. And I've opened it here. You can see it here. It's called. Wait, that's not readable. It's called Locked in Range Analysis and Why Most Traders Must Lose Money in the Futures Market Forex. So this book is about Forex, but the theory is completely usable in cryptocurrency as well. That's the reason why I really, I mean, I've learned a lot about reading this book, because I was very interested in becoming a market maker myself. So that's the reason why I was doing research and reading up about these types of content. So anyways, it's only 66 pages. I really highly recommend it to be reading about it. So basically, it talks about the ranges where prices are stuck in, and how you can use the open interest and the leverages and the basically futures. And futures is what is the most popular trading fundamentals right now for crypto, right? So that's the reason why this book is actually even more important today than 2 years ago when he has written that book, because right now the derivatives market and the cryptocurrency industry is what makes the cryptocurrency trading industry. Nobody really trades spot anymore. Nobody just like buys Bitcoin. I mean, only the people who are holding for a long time, or the really the beginners who are not interested in trading, they are buying spot. But other than that, everybody is like basically margin trading, and people who are even more advanced, they are trading options, right? So basically, those are the things that are the most important. And this book is actually about for futures and how that's important, right? So give you a very small example on what type of content that this book has is it basically gives you a reasoning how you can use open interest, and how you can use longs and shorts ratio ranges to define the movement of the price. Because at the end of the day, the market maker wants to make money, right? And how do they make money? Well, whenever there's too many longs, they will push the price down, so that the longs are getting liquidated. Whenever there's too many shorts, the market maker will push the price up, so that the shorts get liquidated and they take the money from the shorters, right? So that's basically the whole fundamental of the book, and it will give you a more in-depth explanation about ranges, and where you can put profit taking positions, and where you can take stop losses, and so on and so on. So just giving it out here for you guys today. It's completely free, so yeah, make use of it, and read about it if you are interested in trading futures. I think it's a very interesting book. Anyways, so to give an example of how to be using, or how I've been using the content of this book, we can use TRDR. So TRDR is basically a trading view, but it's once again, you can have it free. I'll just make this one bigger, because that's what's the most important is. So there's two things that we are looking at, right? So first of all, it is the long and the shorts ratio, right? So whenever it's green, it means that there are more longers, and whenever it's red, there are more shorters, right? So and then here on the bottom, Hollander, you are going to get banned. Stop advertising and doing that kind of stuff. Christopher, you can download it at tlartrading.com, right? Maybe somebody can link it in the comment section later on. Okay. Yeah, I know. He'll get banned later. Don't worry, Nikolai. Nobody is doing that kind of stuff. Anyways, so there's two things that are important. First of all, of course, the Bitcoin price chart. Two things: longs and the short ratio. Like I explained, whenever it's green, it's more longing. Whenever it's red, it's more shorts, right? And then we have the open interest, right? So, okay, let me give you a very nice example. So, what are we looking for is movement of the open interest, right? Movement of the open interest. So when the open interest is going up, as you can see here, at this point, you can see here, open interest was around 31,000 and it went up to 36,000. So about 4,000 positions were opened. And we can see here in the longs versus shorts, well, what was mainly opened during that period? Longs, right? So you have to understand like this. So open interest went up. You check what kind of what positions did they enter, and basically you can look at it. Okay, it is mostly longs at that price, so the people are stuck at that price. So you can see here they started longing from this spot here all the way up, as you can see. Some of course take profits, some don't take profit and keep on hold on. And then what do you see? Of course, the market maker is going to make a push towards the downside immediately, as you can see, and it will be below the previous basically the long order block that was in. So that's basically how you can use the long short ratio and the open interest to your advantage, because when you're seeing that longs are going up, open interest is going up, that's the perfect time to be entering actually and do the opposite and entering a short position, because you kind of know that the market maker is going to be pushing the price and it's most likely going to be wicking down below the previous order block that where people have been putting their positions in. Let's give another example in the opposite way, right? As you can see here, from this spot here to this spot here, open interest was rising, and what was the main amount that was entering into the positions? Mainly shorts, as you can see here. Mainly shorts were in the position, and what do you see on the price? Price is rallying towards the upside to liquidate the shorts, right? So another example where you can see how you can be using the long shorts ratio and the open interest. Now, what is very interesting is, and that's the reason why I am still not convinced that we will be breaking towards the upside, is of course we can use the ending of this, right? So let's go into now and that's one of the reasons why I am still not a true believer right now. And if we are looking at this, right, so from this point to this point, we can clearly see that open interest has been rising. And what has been opened? Longs. All longs have been opened, and basically they have opened around this order block here. As you can see, that's the order block that they have been opening. And yes, I mean, the market maker is now, yes, it is floating up, but most likely we will have a big dump, and it will most likely below this area as well, below this area, towards the previous, below this order block area towards the downside as well. And of course, yeah, it's around the 8.5k or 8.6k area, is below that order block. So that's one of the reasons why, you know, if I am a market maker, and I mean, there's a lot of very smart people around the world who are market making, it makes no sense to be pushing the price up towards the 10.5k or the 11.5k right now. So once again, read the book. It will give you a way more. I'm just giving you a couple of examples, how to be using the content of that book, and why I'm still not convinced that we will be breaking up towards the higher level, because there is too much longs in stuck right now in that position, and open interest is super high right now, and we're just waiting for that movement, and most likely it's going towards the downside if the market makers is going to do their job, basically. So once again, another example on how to be using the content of this book and these type of charts, right? Wait, I clicked the wrong button. How can I exit this? Okay. So this chart is, you can create an account for free. It's on trdr.io. So for people who don't want to use TradingView, you can just create an account as well on TRDR, and you have pretty much a lot of the indicators for free that you potentially have to be paying on TradingView. So for example, the volume profile. And the volume oscillator and stuff like that, you can have it for free here on TRDR. Sorry, TRDR, right? So, anyways, so read the book if you are interested in understanding more the logic of how futures tradings work. And like I said, the book goes way more in depth. And this is just a couple of examples that I'm giving out for you guys, and you can use, like I said, you can use TRDR if you don't have a paid account on TradingView. You can just use TRDR. That's the reason why I'm giving you these type of tools, because they are free, right? I am a very, like I said, I want my channel to be giving you stuff that are completely free, rather than having paid on other channels. The data is available as well on the TradingView, Nikolai, but it's paid data. So you have to have a pro account on TradingView to have that kind of indicators. So that's the reason why I'm just saying you can have the same on TRDR and it's completely free. So why would you be paying on TradingView, right? So I'm actually giving you all the I've done all the work to help you guys out. So for people who are like looking like, oh, I wish I could have and do that the same, well, now you can, and it's completely free as well. Anyways, so once again, that's one of the reasons why I believe that a lot of long positions are stuck right now around that 9.1k range, and we are just ranging around this area right now, but not really breaking up towards the upside, but also not breaking towards the downside. But I do believe that if the traditional markets are going to be making a move towards the downside later on, I do believe that Bitcoin is going to make that move also towards the downside. And I know it's been a really long road, because it's been very rangy and very slow and so on. But yeah, I still stick with with what I still think from the start. Not only that, and not only because of those type of analyses, I also like I said, just looking at the volume profile, just looking at everything that is how it's moving right now. Of course, it looks a lot better when it's touching towards the top side rather than the downside, right? I mean, of course, but it's still, like I said, it makes no sense for me if this was accumulation and this is the pump of the accumulation, it kind of makes no sense for me that we don't break that resistance line. But well, like I said, I've been wrong plenty times before, and if I'm wrong, then I'll be losing a little bit of money, right? And I'll look pretty stupid. So that's basically it. But either way, I think with the pullback that I'm expecting on the traditional market, I do believe that we will have a pullback on the Bitcoin chart as well. And still, I still believe that we will most likely end up going towards that green box, towards the downside at like the 8.5, 8.6K level to liquidate all those long positions. And the market makers feel it's going to be time to be taking that money. And also, if you are looking at the COT charts, like I've explained that on many times before, most of the accumulation was done between 4,000 and 7,500. So everything is going to be pulled down. Nikolai, if Bitcoin crashes to 8.6K, everything is going to be crashing. All the altcoins are going to be crashing. Link also is going to be crashing. It's not only Bitcoin. Everything is going to take a pullback towards the downside. So also Link. Also, your favorite Link is going to be going back to the downside. I think I've shown you guys this before as well on Chainlink, right? Although it doesn't look that big, right? Maybe it doesn't look that big. I'm not saying it's going to be like a crash or anything like that. But take a look at this. Whenever we have a pullback on Link, this is a pullback of around 22%, right? It's a 22% down. From this point here to this point here, it's a pullback of around 21%, right? So if we are pulling back 21%, very similar from this top here, let's pull it back 21%. Let's pull it back 21%. Yeah, we would be going back to like $5, something like that. $5 towards the downside. So that's what I would be aiming at. I mean, I would be just aiming at the EMA 21 or the 10 simple, most likely the 10 simple moving average. I don't think it's gonna be going that low towards the EMA 21. So around $5, most likely $5, a little $1.2 drop for Chainlink is pretty standard, pretty normal. So I don't think it's that critical. I'm already in a short stick. I'm in a short from around 9,340, something like that. I was laddering in from from the 200 simple moving average on this area. After it got rejected, I entered my short over there. I think 2 days ago. Was it 2 days ago? Yes, yesterday. Yesterday? Was it yesterday? Yeah, yesterday. It was yesterday. I also forgot. But yeah, I'm in a short already. Around 9,340, something like that, was my average entry position, and I still am I'm expecting, like I said, I still am expecting a push rather towards the downside than the upside. Everything is just looking very toppy on the traditional market, very toppy on the altcoin market. Bitcoin has not moved. Or ranging, or going very slowly sideways, right? You can't call this a breakout, right? So if you basically, it has been going down very slowly, right? So we had our top at like 10,400, and then we have here a movement and a movement and then a movement, and then this is what I'm expecting, a rejection from this area, because I don't think we have all the opportunity in the world, right? With the traditional markets pumping, with everything pumping, we should, like I said, we should go we should be breaking it, but sadly enough, it's not happening. It's not happening. I don't see. I mean, that's the problem, right? And as long as I don't see the confirmation, then Stick, you should be watching more of my previous videos. I think it will help you define more critical areas on how to put stop losses and how to take profits. But in this case, it's quite simple. We just look at the previous high, right? So I am in my position right now, but if, for example, if we are breaking above this previous high here at this point here, I'm probably going to be closing my position, and I'll take that $50 or $60 loss as a man. That's basically it. Gold. I've always been very bullish on gold, right? Let's take a look on gold. Yep, over 1800. Kind of what I was expecting as well. The previous all-time high that we were aiming for, right? Let's take a look on the weekly. But yeah, gold looks very, very bullish. To be honest, I think gold is gonna go into the 2000 into 2000 levels by end of the year or something like that, over a really, really long time. But it looks very, very bullish. I've been very bullish on gold since a while now. It looks really good, but it looks very slow as well. So I would not. It's a hedge. Let's put it like that. It's a hedge. But the chart itself looks quite good. But I do believe that we will have a pullback very soon, though. Very similar to the traditional market. I think it's gonna take a dive. Yes and no, Nikolai. So there's two things, right? I believe that we will have a pullback, yes, but I don't believe that the pullback is going to be that substantial or anything like that. On the macro perspective, things are still looking insanely bullish. So do I think that we will have a pullback? Yes, but do I think that this is the end of the run? I don't think so. I think Nasdaq is gonna go to 11,000. That was the inverse head and shoulders that I was calculating. Yeah, I think it's gonna go to 11,000 eventually. Eventually. So that was my measured move for Nasdaq around 11,000. So, but yeah, do I think that we will have a small pullback here towards the EMA 21 or something like that, or towards the 10 simple moving average back to like 10,250? Sure, why not, right? And then it will go back, most likely back up more, to be honest. So yeah, if you want to be safe, obviously take your profits, right? If you want to be safe, but I'm not that worried just yet. I don't see the big dump that is on the forefront just yet, because of this monthly candle. Basically, looking at this monthly candle, it doesn't give me the fear of a major crash or anything like that. So and also I've also explained that before already. It will only start to become critical once we are nearing the elections date, because that is going to be very important. If Trump is going to be re-elected, he's going to be using this story, right? Nasdaq breaking all-time high during the COVID, blah blah blah. He's the best economic president in the world, blah 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 blah, that kind of stuff. Or if the other party, Biden, is going to be winning, then we'll have a completely different story. And Biden already told a lot of people that he's going to be getting rid of like the special taxes, the tax reductions, and so on and so on. So that's going to be affecting the stock market for sure. So when we are nearer the elections, then there will be more doubt, and there will be more stuff. Yeah, sorry, Christopher. We'll remove that spammer very, very, very soon. Okay. Anyways, yeah, I think that's it for today, because we have crossed our time limit. Yes, Kanye West for president. Yes, that would be really, really fun if he makes it as a president. That's gonna be funny, crazy. Anyways, let's wrap it up. So in the short term, maybe we still have some more energies to be pressuring up towards the upside. I don't think that we have, because we are oh look, we have this rising wedge that is starting to break towards down. Oh wait, we haven't gone through the expected move charts yet, so let's do that quickly first, right? Expected move charts, what are you telling us? Let's take a look here. Expected move charts are saying the first standard deviation to the upside is 9,369, which does not break the the trend. Expected moves towards the first standard deviation to the downside, then it's a 9,224, as you can see, and as you can see, the rings are well, the slope is pushing towards the downside, so it's the probability is more towards the downside than the upside right now. As you can see, right now the RSI is very, very high, as you can see, near the bullish control zone. The only thing that I want to show is the 10-hour Stokes, and usually that's, of course, that's preceding the 12-hour Stokes, right? And if you are looking at the 10-hour Stokes, we can clearly see that the momentum is already starting to cross towards the downside on the 10-hour Stokes. So that kind of, you know, most likely, like I said, the momentum is starting towards waning towards the downside rather than the upside. Let's take a look on the daily. Daily is here. Like I said, it's hitting that resistance line that we've spoken about. This is not a falling wedge or anything like that, so don't think that that we're gonna have like a major higher probability towards the upside or anything like that. In the Stokes, we can only take a look at resistances and support areas, but not as a pattern or anything like that, right? So anything else that we can see? RSI, I don't think we can see much on the RSI. RSI is currently above the EMA, so that's nothing new or nothing nothing special. Let's take a look on the 4-hour. 4-hour, as you can see, of course, is starting to go push towards the downside. Let's take a look on the 4-hour RSI. RSI is starting to be curling below, almost below the EMA as well. So yeah, short term, maybe we get one more push up. I have, yeah, maybe, but the most important thing is, like I said, I've been harping on this for a really long time. A lot of people are super bullish. A lot of people are thinking, yes, this is it, and we had all the opportunity and all the chances in the world, with the traditional markets, you know, going like crazy. And do I think that we're going to have a major crash or anything like that? No, I don't think we're going to have a major crash or anything, because the traditional markets are holding everything up really well. But it just doesn't look good in the more short and mid-term. I do think that we will have a pullback, maybe later tonight, maybe tomorrow, somewhere around that. RSI is starting to make this move towards the downside. So I believe that we will have a pullback towards the downside, most likely more quickly than more early than late. So maybe tomorrow, later tonight, when the stock market is open. Let's take a look on the, I want to see the volume also on the daily, because we're still waiting for that breakthrough, right, for that major move. And as you can see here, oops, sorry. We're still, the apex is still there at around the end of July, sorry. So yeah, and the next, it has to happen like in the next couple of days. But I've been saying that for a really long time. But the big move has not happened yet. That's basically what this is telling us, right? The big move has not happened yet. I'm still angled towards the downside, because technically this is what it looks like another rejection at the resistance. And if you've read the book, and if you are looking at the long short ratio, and like I said, just putting yourself as in the shoes of a market maker, I think a lot of people are stuck in their long, or hoping in their long from around these areas for the past couple of weeks, as we can see in the open interest that was being formed. And yes, we do have a big move, move towards the upside here, but I think soon we will have a price that is crashing, and like I said, below this order block here. That makes the most sense in the world as a market maker, rather than up. But crazier things have happened before. If if some of the Tesla fanboys move into Bitcoin, then then it can happen really quickly as well. But anyways, hope this was interesting. I'll post a link of the book or the website in the comment section, so you can check it out as well there, so that there's no mistakes, and so you can download the book for free and check it out. All right. So yeah, hope that was informative for you guys, and see you again tomorrow, same time, same place, 7:30 p.m. UTC plus 8. And until tomorrow, of course, stay home, stay safe, and of course, stay COVID free.